taking a closer look at the $9 billion Bitcoin transaction that happened over the weekend, and doing the math behind $1 million Bitcoin. When is it going to get there? Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today, I want to talk about the transaction that took place on July 25th. Now, in a couple previous episodes, we detailed the movement of 80,000 Bitcoin across the Bitcoin blockchain. What was the purpose of this move? Was there something nefarious to it? Or was it simply an OG cashing in? In the end, we learned it was an OG. From Galaxy Digital, on July 25th, Galaxy Digital Incorporated, a leader in digital assets and data center infrastructure, today announced the successful execution of one of the largest notional Bitcoin transactions in the history of the crypto market on behalf of a client. And interestingly, Galaxy Digital put the information in the op return data of a block on July 25th. It continues, Galaxy completed the sale of more than 80,000 Bitcoin, valued at over $9 billion based on current market prices, for a Satoshi-era investor, representing one of the earliest and most significant exits from the digital asset market. The transaction was part of the investor's broader estate planning strategy. And I found a few things interesting about this press release and this op return data. Number one, it mentions Satoshi Nakamoto. This particular person had a likely relationship with the protocol in its beginning days. And this mark in the press release that it was a Satoshi-era investor might mean that this was someone that was in communication with Satoshi Nakamoto, either publicly on the Bitcoin forums or via email. And because Galaxy Digital doesn't have to disclose this information, it did so for a couple reasons. Number one, Galaxy wants to be known as the financial institution that can execute transactions of this size. So it wants to be a leader and it wants that branding. But secondly, the movement of these 80,000 coins to and from the seller, broker, and then ultimate purchaser, that chain of transactions can all be seen on the Bitcoin blockchain and has been seen moving across. And so Galaxy wants to put a stamp on that transaction and show the market what is happening and maybe clear up some doubt about these transactions. I also found the last sentence interesting. The transaction was part of the investor's broader estate planning strategy. Why this statement? What does it mean? I think that it means this investor wanted to communicate, I am not giving up on Bitcoin, but I am cashing out $9 billion for an investment. And at the time, it was likely not even considered necessarily an investment. The Bitcoin network in those early weeks and months was really only characterized as a project. It wasn't until 2011 where people actually started thinking about the Bitcoin market. Well, these are 2011 era coins, so maybe it is one of the first people ever to think about Bitcoin as an investment, but more likely this was a technologist that was in Bitcoin from the beginning of the network protocol. The era of institutional Bitcoin adoption is fully upon us. With ETFs and new corporate treasury models, gaining exposure has never been easier. But this creates the powerful temptation to hand your keys over to somebody else, which might be the exact opposite of what you wanted to do with Bitcoin in the first place. Having the control of Bitcoin private keys has never been more important, but there is always the risk of self-custody. So how do you battle that? You do it with Unchained. Explore the full suite of tools today at unchained.com/TBL, unchained.com/TBL. Blockstream, where the future of finance runs on Bitcoin. Go to store.blockstream.com and use code TBL for 10% off. Pick up a Jade Plus hardware wallet. It integrates seamlessly with your Blockstream app, and it's the perfect way for both pros and beginners of Bitcoin to get started with your cold storage. Store.blockstream.com, use code TBL for 10% off. Now let's take a look at this chart from our friend James Check from Check on Chain. He had a great little graphic to show you the moment at which this Bitcoin looked to be sold, the price action, and the subsequent reversal. Now, we are here approximately 3 days after this transaction hit the market. Today is Monday, July 28th. The block height right now is 907,614. Now, the price right now is 118,000. The price at the time of this sale dropped to about 115,000, but recovered in the next day or two in an absolutely remarkable display of market resilience. Now, there were no buyers in the strategy size over the weekend in the market to absorb. That means that whoever bought those Bitcoin that were sold onto the market, those were active market participants, or what we think of as market makers. The most important thing about market makers is that they must be able to pair buys and sells. So if a market maker is going to absorb a sale order that size, it must have confidence that it is going to be able to sell those Bitcoin quickly and at a profit. Now, how do these market makers ensure that they will make a profit? They don't take market risk. They hedge out their trade. So if they're going to buy this amount of Bitcoin, they're going to try to sell futures and offset the risk for them until they unload the Bitcoin. And as they unload the Bitcoin, they are going to capture spread and roll off their hedge accordingly as they go. That's how market makers are able to make two-way markets. They are not in there taking bets and absorbing a sell order and hoping that the price bounces and that they'll be able to sell it higher. That's not how this game works. They have to be able to make a two-way market. And what we see with the market bouncing back in the subsequent couple days, the Bitcoin market is telling you that an 80,000 Bitcoin sell order, or in dollar terms, $9 billion hitting the market, is absorbed quickly by a combination of the end user and market makers that are just floating the market until they can pass those coins off to the end user. It's so fascinating for so many reasons, but if you are to explain it in maybe one or two sentences, what this means is that Bitcoin, the market itself, is so big, so deep, that it can absorb $10 billion trades very easily. Now, going a little bit deeper into the significance of this movement, we think about Bitcoin in past cycles, how it bubbles up and then goes into a 2 to 3 year winter. That is something now, as every day passes, you want to see Bitcoin avoid as much as possible. That means not getting to valuations that are so stretched that a sell order like this can absolutely destroy the market for months or even years. We saw quite the opposite of that with this sell order, a sell order that the market worked off in a matter of hours. It means that Bitcoin is set up for both a huge amount of absorption of sell orders from OGs if and when they come to the market, because this one individual or entity with 80,000 Bitcoin is not the only OG sitting on an enormous stack ready to finally at some point cash in on this decision to buy and hold Bitcoin over a decade plus time horizon. There will be more of these individuals, and when they come to market, the market is showing us that it can absorb this type of selling. It also means that in the absence of that type of size and selling, you will see Bitcoin demand continue to push the price higher over that medium time horizon as more and more entrants come onto the network. It really is about network growth. The size of the network growing over time builds the embedded value within this network. Seeing Bitcoin make its transition from a digital collectible to a full-blown global macroeconomic commodity that maybe has a once-in-a-millennium type of effect on the global economy, it's something to marvel at, and we must think about Bitcoin in this context so we don't get lost in the sauce. Now, speaking of keeping Bitcoin in context, I went on CNBC India last week and said that Bitcoin can go to prices over $1 million in the next 5 to 10 years if it continues to compound at 30 to 50% compounding annual growth. Now, instead of speculating on the math, I went straight to the spreadsheet where I feel comfortable doing the math and projecting out Bitcoin's growth rate and price. So I'm going to pull up this graphic for you. This is a spreadsheet that I built in less than 5 minutes, just trying to put together the expectation, where we should have our expectation on this next order of magnitude. Now, I've been around for the move from $1 to $10,000 and $10 to $100,000. And each order of magnitude takes a certain amount of years. Now, the time between $10,000 Bitcoin and $100,000 Bitcoin was about 7+ years. If we take 7 years from the time that it hit $100,000, that is going to put Bitcoin at $1 million to get to that next order of magnitude, basically adding a zero to its price by the early 2030s. That is the most crude way to think about Bitcoin's growth, is that it can add an order of magnitude every 7 to 8 years. But what is the math behind that? How does it get there, and at what growth rates? So I gave you 3 scenarios: annual growth at 30%, at 40%, and at 50%. And at $118,000 today, if Bitcoin grows at 30% annually, compounding, it will reach a price of $962,562 in mid-2033. That is 8 years of 30% compounding growth, taking Bitcoin from $118,000 to $962,000. At 40% compounding annually, Bitcoin goes from $118,000 today to $1.243 million by July of 2032, 7 years from today. If Bitcoin grows at 50% compounding annually for the next 6 years, it will reach $1.344 million in the year 2031. This is not projection or speculation. This is math. And if Bitcoin grows at these rates, it will hit $1 million sometime in between 2031 and 2033. That's 6 to 8 years from now. So the time to talk about $1 million Bitcoin is today. It's not at 200,000 or 300,000, or it's certainly not at 500,000. The time is now. And we don't have to pretend it's going to get there this year or next year. I certainly don't feel that it will. I genuinely believe it will get there somewhere between 2031 and 2033. Now, we can talk about power laws, and we have and we will. We can talk about the Bitcoin asset. We can talk about the Bitcoin market capitalization in relation to gold. We have and we will. We could talk about Bitcoin being adopted as a global reserve asset, and we will continue to do that. But sometimes you have to strip all that away and just think about the math. Bitcoin is outpacing equities, which are returning 10 to 15% compounding annually over these relevant time horizons of Bitcoin's existence. Bitcoin is going to outpace the equity market, in my opinion, for the next 6 to 8 years. So it becomes very realistic to me that Bitcoin achieves 30% compound annual growth rate over the next 8 years, which would put it at $1 million in 2033. Now, if you want to talk about my expectation, it is that Bitcoin adds an order of magnitude in a similar time frame than it did the previous one, which puts it right in the middle of this time range. But if you want to think about what would cause Bitcoin to get to $1 million over a certain time horizon, you can put your own spreadsheet together. And I did that for you guys so that you can see, okay, if I think it's going to grow at 50% compounding annually, it will get to this price on this date. Thanks for watching today at the Bitcoin Layer. Please subscribe to this channel, rate and review on your favorite audio platform. We'll catch you guys next time.